How does the resource sector look weeks into the conflict with the US and Iran? I talked to Kai Hoffmann. He is the CEO of Ornik, which tracks resource financings. Second half of this conversation was with Mark Selby. He is the CEO of Canada Nickel. He is advancing his Crawford nickel sulfide deposit project, which is going to be moving to a construction decision later this year. Before we start, I want to thank our sponsors. That is Vizsla Silver, Equinox Gold, Revival Gold, and Integra Resources. I also want to thank Trevor Hall. He's away this week and he's allowing us to fill in. Now, my conversation with Kai Hoffmann. Our next guest tracks a key metric, which can help us understand where this bull metal market is headed. Kai Hoffmann, he is a managing partner of SOAR Financial, and he's also CEO of Ornik, which tracks resource financings in the junior space. He's also hosting Deutsche Gold Messe. That's going to be a 2-day conference with 40 select companies. That's going to be in Frankfurt, Germany. Kai Hoffmann, welcome to Mining Stock Daily.
Michael, it's great to be back. And by the way, you have the best pronunciation of Deutsche Goldmesse, and nobody else can do it in North America. So, congrats on that.
I know what that's in reference. That was a callback. I was telling you it's kind of the neatest conference to pronounce. We're going to talk about your conference in a little bit, but let's talk about the markets and let's talk about metals, Kai. A couple of weeks ago, we had the U.S.-Iran war. We've seen a key supply route that we've realized globally. That's for oil. That's for sulfur. That's for, we're seeing for other types of commodities that are really important for driving miners and driving the worldwide economy. Metals are still hanging in there right now, but what are you seeing in terms of investments? What are you seeing in terms of really the lifeblood and kind of keeping these resource companies afloat?
Yeah, no, it's an interesting question because the miners have reacted quite aggressively towards the geopolitical turmoil that we've seen. Meaning, it's followed the metals low, or they have followed the metals lower. Not just the share price, but also activity has slowed down a bit. I don't think sentiment has changed. I think people have just taken a step back. They're waiting for things to settle down before perhaps stepping back into the market or opening their wallet again. So what we're tracking at Ornik, of course, is the financings of some of the companies in our space, meaning companies below $1.5 billion in market cap, and equity financing, solely equity or only equity financings below $100 million. And we've seen a dramatic slowdown in recent weeks. I just contributed that to just a risk averseness. People are waiting for clarity. Gold and silver have sold off massively as well. So shareholders and investors have just taken a step back, just waiting for things to settle. And we're seeing the commodities are doing much better. The precious metals, gold, silver, are up. Silver especially, touching $80 again here. Gold silver ratio back down to 60 points flat. So the trend is positive, and I don't think it's been a sentiment change. It's just maybe a pause.
I should qualify at the start. You're certainly right. There was a step down that was happening in the precious metals. I mean, gold was up and around the 5,000s and then took a step back around 500. I think I saw 4,300 it got as low as. But look, Kai, we've been in this business long enough. It's hard to say that $4,300 gold is actually a step back.
No, it's not. It's just a perspective, right? How are you looking at it? If it was 2024 or even 2025, early 2025, you'd say, wow, 4,300, that's amazing. But coming from 5,600, we're looking at it like, okay, this is going the wrong direction, and everybody, is throwing in the towel. There's some resignations, of course, and it's shaking out tourists, which is actually a good thing. So I'm hoping I don't take anything away, Michael, but the gold and silver price have run up aggressively and very dramatically as well. Like, people have been calling it a blow off top, especially in silver. It was a straight up hockey stick move, which was too extreme. I would say doesn't mean it's just not justified, but the move was just too fast, and a lot of people jumped on board and they've sold. Like, they saw the panic in the streets, they saw a need for liquidity. Also, central banks saw a need for liquidity, and they just flushed out the precious metals that they bought on the way up, maybe even at a loss. I'm not sure about the central banks, but sure, some of the retail investors selling their ETF holdings must be sitting on a loss, and just happily took them because there was just too much uncertainty.
Talk about the bull market that we've seen through 2025. Obviously, the producers and the majors did just amazingly well. We'll just keep it with gold. But talk about how much we saw the lift that you would consider in terms of going into the junior space. Was it really like, did you see broad turning into the juniors? Did we have a real gallop there? How would you assess that? I'm just talking about market price, Guy, or would you say it was kind of a little bit more selective, or were we still waiting to, how would you say, to see a full embrace of what was happening in the juniors after the producers had run?
I don't think we've seen a broad rally in the mining stocks yet, personally. The grassroots explorers, companies without projects, they're still, I wouldn't say struggling is perhaps the wrong word, maybe a bit too strong here, but they're still having a harder time raising money. And we're seeing that especially right now, the wallets are shut for grassroots explorers. The developers, the juniors with the resource already, they're doing fine. They've had a massive price performance. They've been re-rated because now everybody's looking at the prices or the valuations at spot, and also the analysts raised their price forecasts, not just forecasts but also consensus pricing on the precious metals, and they've moved up valuations and just ratings as well. So we've seen the lift, but not in all the explorers. There's still a bit of a distinction. Money is still being somewhat selective, although like the rising tide has lifted a lot of boats, and a lot of turds are flirting at the surface right now as well.
Anything that particularly works in this environment, Kai? Is there any preference for jurisdiction? Is there any preference for how long a stage the company is, or is it really is that look, we have generally a better market than we've had in the past right now, and we're just going to be looking at management in terms of and also the asset.
Top of my head, I would say, Michael, that maybe the U.S. developers have been doing extremely well, especially in the gold space. Liberty Gold comes to mind. I'm conflicted. We hold it in the fund, but I've seen that stock recover really well and really quickly as well from that drawdown. A lot of other developers are still trying to catch up and haven't seen that momentum kick back in. So I think they're benefiting right now. US-based developers, explorers, but also producers are doing well. It's just a macro backdrop. The US government is pushing, of course, the resource strategy forward. Project Vault was announced, $12 billion critical mineral, storage of critical minerals in the U.S. So I think the U.S. macro backdrop is much more favorable. Canada is close second, I would say, when it comes to that, but also more the developer and the producer space. I think the explorers are still struggling. It depends a bit on where you are in Canada as well, more so than maybe elsewhere. Political risk is massive, but overall, no, it's the developers that I'm most excited about. Although the producers are the what do you call it? The most with the least risk, and I'm saying that maybe in air brackets here, that have the least risk. And then, of course, I don't really want to talk about the boring streaming and royalty model, but in times of crises, I think those are the safest haven investments in our space, if they can be called that.
I'm going to lean on you with another company that you're acquainted with, or you might be conflicted with. You mentioned in another podcast. And generally, I just want you to, you talked about the U.S. How is the Middle East right now in terms of a place to invest? Obviously, the Middle East has kind of been getting behind its resource base, and we've seen companies that have been entering. I was recently talking to Tim Coughlin with Royal Road. I think also that when I heard you last, you were talking about was it Sun Peak Mineral? Is that correct? I just was wondering also, how are people actually being able to operate in the Middle East, given what's happening there right now?
I still think they can work there. It's a really interesting jurisdiction because it's opening up. A lot of money is available there. We'll have to see whether money gets diverted into infrastructure projects, but Saudi Arabia hasn't really been hit hard by the crisis in the Middle East, so I'm not too concerned about that. But it's also it's just virgin territory. A lot of companies have grabbed concessions is the word I was looking for. Sorry. Just a short break. And they've been advancing those. It's very early days. It takes a while to, of course, explore. You got to do grassroots exploration. But I'm really excited. Sun Peak, Royal Road. I'm personally invested into a private company in Saudi with assets in Saudi Arabia. So I'm really excited to see what the future will hold. But you have to be patient. The situation in the Middle East might have kicked back timelines by 3 to 6 months. We'll have to see, because nobody wants to travel there right now, quite honestly. And understandably, even as an investor, I don't want anybody working there. I'm really concerned about safety for the people there. We're already in mining, which is risky enough, so we don't really have to expose anybody to even more risk. But the point is, it's great and it's very prospective. I had the chance of speaking with Rick Rule yesterday. He's deployed quite a bit of capital in the region as well. Robert Friedland, many others, of course, are operating there as well. So I think it's a very favorable backdrop in that region, meaning they're opening up. And they're just attractive. And I wouldn't call it a tier 1 jurisdiction yet, because it's too young. It needs to mature a bit, but it has the hallmarks of it.
Let's talk copper. Is something that we should really mention, because that's the other metal that's just had a terrific run. I believe seeing copper futures well over $6 for start of this year as well. You're somebody that is investing right now, somebody that is punting. But these are always kind of two different stories. Gold, the fear trade. Copper, constructive. You're looking at terms of energy transition, although I don't know how popular that word is anymore. But what's your preference right now? Do you how much do you invest in? What's your preferred in terms of looking at copper ahead and also looking at gold ahead?
I think it's easier to make a case for copper to maybe 3 times, 4 times, or go 3 times, 4 times higher. It's not as easy for gold, in my opinion, because it's just a supply and demand situation that will push copper prices higher, and which in the end will regulate the demand for it as well. You touched on the EV transition, but there are many other factors at play. And just looking at the supply side, there's nothing coming online, nothing. And we need a ton of more mines. And coming back, like one of my favorite jurisdictions is the US. They're sitting on quite a bit of copper. And I read a recent study, I think it was in the Financial Times, that showed that the US can actually oversupply its own domestic demand by over 150%, while China has is undersupplied copper. So I'm talking about holding trump cards and, being maybe energy or metal dependent or independent. The U.S. actually has a possibility to achieve that goal in the copper space. They've achieved it in oil. They could do it in copper as well. They just need to bring a couple more mines online. We're talking about Resolute, Cactus. I forgot the Ivanhoe Electric name, but also there are other assets up there in Alaska. So copper, personally, very excited about it. Very excited about the stocks. Personally, I'm still too underweight copper stocks. I need some more new ideas. I need to go look maybe further south in South America for some opportunities. There are not too many in North America right now that I know of, but it's one of the most exciting spaces of the mid to long term.
Let's talk about worries. Let's talk about what could potentially hold back the juniors or hold back the miners. There's the inflation worries right now, which is happening with the Strait of Hormuz. We're seeing like the increase in diesel prices. There is all the money that has flowed in. We've been hearing stories again and again after people saying that they're backed up in terms of being able to get their assays. There's also jurisdictional risk as well too. Look, these are high metal prices. Ghana is going to be increasing its tax take right now for what it's actually going to be taking out of the metal people there. Talk about anything that you see that could be potentially slowing down or could be potentially a worry right now for the miners, juniors. I'll let you take it from either side.
Yeah, it's like I think we have to separate it into macro and micro factors sort of influencing our space. Macro, definitely inflation, because that could lead to higher interest rates, especially in the US. And we've seen what it does to the mining space and especially mining financings when the Fed hikes interest rates. We saw that in March and May 2022, the Fed hiked rates and just the risk capital completely disappeared. Our sector dried up, and we had really 2 really bad financial years when it came to capital raisings. On the micro side, yes, I think a lot of money has gone into the sector last year. We raised $6.8 billion just within our coverage universe. A lot more money was actually raised if you include all the developers and companies that achieved going over $1.5 billion in market cap. But the point is, a lot of companies have money, they will explore, and they will fill up the labs. The labs will be backed up. We might have to get used to longer turnaround times. You touched on it. Assay turnaround times are really critical, so we might have to wait till September, October to get the summer drill results, which is going to be very frustrating. Some of the labs are prepared, but not all of them, because as always in mining, it's cyclical, and it always comes when nobody expects it, really. And we're 12 months into a bull market, I would say. Labs are prepared, but I'm not sure how well they're prepared for that flush of capital by the explorers. So there's micro and macro factors, Michael, to summarize, that could hold us back, but I don't think anything will change sentiment unless it's on the macro side.
In the resource space, is there anything that is a contrarian bet right now? Is there anything that you look at that has been beaten up or that has the potential to turn around? I'll give a shout out to Rick Rule. So when I was talking to him at the New Orleans show, he was saying that oil was one of his favorite contrarian bets, or just straight out his favorite bet, and that seemed to work out well for him. So is there anything out there that you see that you think that is beaten up, but the wheel might turn for them, Kai?
Yeah, that's a very good question, because I think gold, silver are still demanding a lot of attention, and just despite the correction, there's room for opportunity here, and the charts look very constructive on the precious metal side. Personally, I don't follow the battery metals or the niche metals. Oil and gas was a great bet. Personally, I'd probably go short right now, just given the backdrop that U.S. and Iran might be nearing a peace deal. At least they're communicating again, which is a positive sign. Israel and Lebanon are working out their differences seemingly as well. So I think the backdrop is more for short oil right now than long oil when it comes to the commodity trades and the bets I would take. Other than that, as I said, I'm really bullish copper mid to long term. But gold and silver, I don't think that run is over. We will see over $5,000 in gold again. And silver has a chance to reach $100 again and maybe even break out higher. But again, we need to keep the macro backdrop in mind. If the duration of the Middle East crisis continues or is longer than perhaps anticipated, and the oil reserves start to run dry worldwide, then we have different problems.
Lastly, Deutsche Goldmesse coming up. Tell us about the show. What are you going to be hosting in Frankfurt, Kai?
Yeah, really excited about this edition. It's our 10th edition in person. Really looking forward to it. We have 40 companies, so we're sold out on the corporate side, and we have 6 keynotes, 1 fireside chat guest, which we just announced this morning, actually. Doug Casey will be joining us virtually. He's not traveling to Europe for obvious reasons, and I fully agree to a degree why he's not traveling. But it's free for investors to attend in Frankfurt. 2 days, as you pointed out, Friday, Saturday, May 15th and 16th at the Westin. Companies are we have a wide range of companies. Really excited about it. We have the First Majestics, Mari Marker Copper, but also smaller explorers down to 10 million market cap size. And so it's a good range. And our goal is to educate. We're not trying to sell you anything. You have to make up your own mind, but we want to educate. That's why we have the keynotes, we have the panels and fireside chats. And I hope everybody takes up that opportunity.
Kai Hoffmann, thanks for speaking with Mining Stock Daily.
Thanks so much, Michael.
Canada Nickel is advancing the Crawford nickel sulfide deposit to a final decision at the end of this year. Mark Selby, he is CEO. Mark, welcome to Mining Stock Daily.
Great to see you, Michael.
Mark, bring us up to date with the project. There's a lot that's going on this year.
Yeah, no, since 2019, when we founded the company, we've had a number of big milestone years, and 2026 was going to be the biggest of them all. We expect to get our main federal permit this summer. We're looking to put the full financing package together to be able to start construction on the project. And then, we want to be in a position, to be able to make that construction decision, by the end of the year or early next year, to be able to get Crawford, which is, would be the Western world's largest nickel sulfide operation if it was fully ramped up today.
Uh, Bring us up to date with the geology and just generally as well too. I mean, there's a lot of attention what is happening with Indonesia. That's the HPAL that they're using for the laterites. You're using, I believe, it's ultramafic, which has got some advantages in terms of it being a cleaner process, but you also have to move a lot more rock. Correct?
Yeah, no, that's correct. So what we have at Crawford and all of our deposits, we now have 8 separate deposits in the Timmins Nickel District, and now have a total contained nickel, larger than the Sudbury Basin. Now, these ultramafic deposits, they're the ones that we have are very large scale, close to surface, so you can do big, low cost open pit mining, but you need to do that because the deposits are quite low grade relative to most of the traditional Sudbury nickel deposits, where back in the 1960s 2/3 of the world's nickel came from, and also to the laterite deposits that are in Indonesia, where you either have to take ore at about 1% nickel, put it in a furnace, or dissolve it all in acid. The big advantage that we have, though, is, and what helps make it cleaner, is our concentrate. Based on the mineralogy, we produce a 34% nickel concentrate. So we can upgrade it, relative to the laterite deposits before we have to do any downstream processing by a factor of 30x before we go into the downstream processing that's there. The other big dimension of these ultramafic projects, which help make them cleaner, is the rock that hosts these deposits, that literally makes up 90% of what we're mining, are made up of minerals that have the ability to spontaneously absorb CO2. So there's one mineral, brucite, that's very, very reactive. And we developed a process that, basically at the end of our mill, before we pump the tailings out to the tailings facility, we literally bubble and stir CO2 into it, and can store up to 1.5 million tons of CO2 per year when we're fully ramped up. So that would make us one of Canada's largest carbon storage facilities, as one of the Western world's largest nickel sulfide operations.
Mark, talk a bit about the economics and the capex. When you've been talking about the project, it really has to do with kind of the infrastructure that you have nearby in terms of being able to move things.
Yeah, no, for sure. That's a great point. What these big ultramafic deposits, again, you have to mine them at a certain scale to bring your unit costs down per ton, to a number that makes sense. And so, we're quite fortunate. We're just outside Timmins. We've got a highway, power lines, rail line nearby. And so, we've got all the major infrastructure nearby. We have 60,000 people in a six communities who live within an hour's drive of the mine site. So we'll have a workforce that can go home every night, which is a big cost advantage. And so, having those deposits in a place like Timmins, really helps the economics. Again, what we're doing with Crawford and hopefully in the future with the other projects, it's just going where copper and gold have already gone. Cisco and Detour are now Canada's 2 biggest gold mines, and those are basically sub-a-gram. They're mining, I think, started at around 55 or 60,000 tons a day, and then have pushed that further. We're starting at 60,000 tons a day, twinning it to 120,000 tons a day, which, in the copper space is, literally that would be a mid-sized copper operation. That wouldn't be large. It's just new to nickel. But, we haven't made big new high-grade discoveries like we've had in Sudbury for a very long time. And so if the world wants nickel from somewhere other than Indonesia, it's going to be these big ultramafic deposits that we have in Canada.
You've had significant support from the Canadian government. Talk about how that piece works with your financing, and what is the piece that you're going to need to fill, or what is it going to need to fill in?
Yeah, we ended up 2025 and started 2026, with some tremendous government momentum. So we were named to the Major Projects Office in November. Had Minister Hodgson come to site. A great press conference. Got to tour the site. Posted this wonderful video on social media. All the social media feeds, really highlighting the strengths of the project and the province. We had Minister Lecce and Minister Pirie come to site in January, and then we were referred to the 1P, which is the expedited permitting process for Ontario. Having that, that very clear government recognition has been, we were already well down the path and doing well, with a number of different, consumers, industry participants, other governments. But, we're in a much, we're in this brings us to a whole other level in terms of attention globally. In terms of the financing stack, this is one of the things with critical minerals projects here in Canada. We qualify for a 30% investment tax credit, which effectively gives us 30 cents of free cash on every dollar we invest. Because of our carbon capture, we also qualify for some bucket of dollars that we have where we get 50 cents on the dollar where it's involved in the whole carbon capture setup. And so it's again, these large scale open pit operations, $2 billion is what we had for feasibility study and in the FEED that we completed last year. And so that funding package, 600 million of the $1 billion of equity that we need to build a project will come from these investment tax credits, which we're looking to bridge towards. We have Samsung SDI as a shareholder, and they have the option to buy 10% of the project for $100 million US. So we're basically solving for $300 million, which can come from a full range. Each of the G7 countries, by and large, have some sort of critical minerals funding program. We've got a number of other federal government programs in addition to the investment tax credits and provincial programs that are in place. And so, we're looking to basically build that stack out from the very funding sources, and we're working with Scotia and Deutsche Bank and kicking off, looking to sell another 10 to 20% of the project to get another couple $100 million of equity over the line. So we're in good shape in terms of what the overall package is going to look like.
Mark, I don't need to tell you, it's been a tough nickel market, and maybe you can help me understand why this project works in this tough nickel market. So I think back in 2024, you had some major nickel mines that were put on care of maintenance. So Ravensthorpe, for instance, Nickel West right now as well too. How can you? What gives you confidence in this market to build a new nickel mine?
Yeah, there's two big things. So one is in terms of Indonesia. So they've been a huge increase in supply. They're now 2/3 of global supply, and as a reference, OPEC at its peak in the early 70s was just over half of the oil market. So Indonesia is an ONEC of one country today, and so the good part is through the latter half of last year and into this year, we actually just had another major announcement this week. Indonesia's put a whole series of policy steps in that are going to really allow it to, number one, manage the ore supply and nickel production out of Indonesia, and two, make sure that more of the value of that mining that's happening in Indonesia is captured by Indonesians as opposed to the Chinese processing plants. And so, 2026 is a real pivot point, and any investor listening to this video, I would encourage you to look at a whole range of nickel opportunities, because we've really gone from a fundamental pivot point where back in 2024, most of Australian nickel production was shut down, and so we're now in this pivot point where we have a big supplier of nickel who's looking to manage the market to maximize value as opposed to maximize supply, and what to be able to be in a position with our project where at those kinds of nickel prices we're in great shape is a real opportunity, and again, I think it is a real transformative year that most investors need to pay attention to. The other big plus with that 2024, the unfortunate read-through is people saw all those mines shut down in Australia and then said, oh, that's all global nickel production. As someone who in a past company owned and operated a nickel gold mine in Australia, operating costs there are significantly higher in terms of labor, energy. Pretty much everything is more expensive in Western Australia than it is where we are in Ontario and elsewhere. So a lot of some of those shutdowns reflected not so much the nickel market, because prices even at that point were, almost double what they were back in the prior cycle bottom in 2016, but were more a reflection of higher operating costs in Australia and a lack of investment by those Australian mining companies, who struggle to reinvest the money necessary, to keep those mines operating at, as low as possible point on the cost curve.
What is your project looking like in terms of power right now? Also, I guess you have the Ontario power grid close by.
Yeah, no, we're quite lucky. We have an agreement with the First Nations community, Tequatagua Nation, who are going to build the 23-kilometer power line into the province. We actually have two major power lines that cross the property. So we're in tremendous shape. Ontario is one of the jurisdictions that has relatively low cost power globally. It's low carbon power, and so in terms of our carbon footprint is also very beneficial. In Ontario, this government has put forward a very aggressive long-term power expansion plan. So we're building the first small modular reactors in the world, in the G7 in Ontario, and they're looking to build out literally 10,000 megawatts plus of nuclear and other power in Ontario. So again, globally with energy costs, unfortunately, of what's happened over the past 3 months here with the war in Iran, it just reinforces the benefit and the long-term advantage, structural advantage that we have in Ontario.
Mark, I think I also read as well too is that you're kind of going fully downstream for that after your tell again. There's a difference between what Indonesia produces versus what you produce, but then after that, that's going to be going downstream and processed further.
Yeah, so we're basically we produce two concentrates, a nickel concentrate that's got cobalt and PGMs in it, and we produce a magnetite concentrate that also has nickel and chromium. So a bunch of our team are all ex-Inco. We operated global nickel processing networks globally. And so we're copying a set of plants that Inco built in Asia, which were a very low cost way to get feed into the stainless steel and alloy market, in our case as well for the electric vehicle market. So we're effectively copying these plants that have operated for 60 plus years. And then in terms of the magnetite concentrate, there's a whole family of alloys that use iron, chromium, and nickel. And so rather than spend any time or effort trying to separate them, we're just going to turn them into metal, top up the nickel and chromium contents, and make a range of alloy steel and stainless steels. And so we'll be the only significant stainless steel producer in Canada. So in terms of elbows up and becoming more self-sufficient in Canada, the operation that we have, we're going to build in Timmins, we think it's going to be a key differentiator.
As you get to that investment decision, Mark, what are going to be some of the top risks that you have to address? What do you have to concentrate most on in terms of kind of getting to that investment decision?
Yeah, it's really going to come down to the financing package. We're on track to get our main federal permit this summer. We're making good progress. We're already making good progress with the provincial permitting, getting admitted to the 1P expedited permitting process in the province just gives us that much certainty that's there. So, it's just basically getting all of the different elements of the financing package to come together, in a time frame that'll allow us to make a construction decision, and start construction sometime in 2027.
Lastly, Mark, let's talk about the nickel market. So we did see that spike at the beginning of the year. So I believe that was shot up through 18,000, kind of back down a little bit now around 17,000. So it's been a good, how would you say, it's been a good market. Some analysts have said, though, that the market is a little oversupplied at this point right now. What's your feelings? What do you think is happening with nickel in the long term?
Yeah, so we had a big step up at the end of the year, start of the year, where we sort of, drifted down to the 14,500 per ton level, and it was the Indonesia news that we're going to manage supply, and you did see an immediate almost $4,000 a ton increase in prices at that point. We did give up a little bit to 17,000, but Indonesia this week made some changes in terms of the minimum ore price formula that they use within Indonesia. The Indonesian acronym is HPM. And so by including byproduct values in there for the first time, where the Chinese processors were effectively getting them for free, it's increased the cost of production there fairly significantly. So we saw, another move higher in nickel prices, by about $600 or $700 a ton just in this past week to up over $18,000 a ton. And I think once we get past the Iran war overhang, you'll see prices move up even higher to the $18,500 to $20,000 a ton range. I've been a big critic of some of the analyst forecasts. I think there's been some miscounting in terms of actual supply, in terms of what's happening in Indonesia and China. Nickel's a little unique. That's a very closed environment. So there's very little, not nearly as much trade data to be able to really nail down what supply and demand is looking like. We would not have seen the kind of price response and sustained price response all the way through the value chain that we've seen since the announcement at the end of December. And so, that suggests that there's not nearly as much of an inventory overhang as some analysts suggest. So I think we're in great shape. And again, investing in oil outside of the Middle East in 1972 was a pretty good trade for a couple of decades. We think with a disciplined supplier now in Indonesia focused on maximizing the value of their nickel output is going to mean nickel projects like ours are going to be an equally attractive trade for the next couple decades.
Mark Selby, thanks for speaking with Mining Stock Daily.
Great to see you and looking forward to keeping in touch.